Okay, let's get right into it. It really feels like we're heading into a massive make or break moment for Bitcoin as we look towards 2026. You see, there are a few powerful forces brewing all at the same time, and we're going to break them down. Because with Bitcoin, it's never just one thing, is it? And this? Well, this is the big question, right? Is what we're seeing right now just the quiet before a massive storm of volatility? Or maybe is it a really unique opportunity for the next few years? Let's try and figure this out. So we're calling this a perfect storm. And as you can see, it's not just one thing. It's a mix of three key ingredients all hitting at once. A flood of global liquidity, some very predictable market patterns, and of course, the ever-growing pile of institutional money. We're going to look at the first two as the engine of this storm, and that third one, well, that's the fuel. All right, let's start with the first major ingredient in this whole thing, the massive flow of cash that's just pouring into the financial system. And honestly, you got to get this part to understand what might happen next. So what in the world is global liquidity? Well, in simple terms, it's just the amount of money sloshing around the entire financial system, usually thanks to central banks printing more of it. You have to remember, Bitcoin doesn't live in a bubble. It's absolutely connected to the wider economy. And to give you a sense of the scale we're talking about, just look at this number. That's $13.5 billion injected in a single day. To put that into perspective, this was the biggest operation of its kind since the 2008 financial crisis. It is literally a tsunami of cash, and it's looking for a place to go. And this quote just nails it. Think of Bitcoin like a thermometer for all that money. When the central banks fire up the printing presses, some of that new cash looks for assets with higher growth potential and, yeah, higher risk, like Bitcoin. So as liquidity goes up, the temperature on the Bitcoin chart tends to go up too. Okay, so that's force number one. Now, for the second piece of the puzzle, market patterns. If you've spent any time in technical analysis, you've probably heard people throw around the word fractals. So what is a fractal? Don't let the fancy word fool you. It's basically just a pattern that tends to repeat itself over and over again at different scales in the market. And history shows us that Bitcoin, for whatever reason, loves to follow these patterns, especially when big economic news is on the horizon. And what's wild is that this pattern often plays out like a three-act play, almost like it's following a script. First, the price goes up as everyone gets excited about upcoming news. That's the classic buy the rumor. Then, the moment the news is official, bam, you get a sharp correction. That's sell the news. And finally, things cool off, the market finds its footing, and builds a solid base for the next big move. All right, so we've got the ocean of liquidity and these historical patterns. But now we have to add that wild card we talked about, the big institutional players. And when you mix all of those things together, you can start to sketch out a few potential paths for Bitcoin. So let's see what that looks like in terms of actual numbers. These are the key price levels that analysts are watching like a hawk. And they come directly from those historical patterns we were just discussing. The patterns suggest that a potential buy the rumor peak could hit somewhere around the $94,000 mark, which would then trigger that sell the news correction, with the first major safety net, the first area of support, probably showing up near 70,000. But the real foundation, the launch pad for the next big move up in 2026, could get established at a deeper support level, maybe down around $50,000. So this table kind of brings it all together into three different possibilities. The base case, that's where we see a correction and then a pretty steady rebound. The bullish scenario is where that institutional money really comes into play, maybe pushing prices past all-time highs with some serious volatility. And then there's the conservative scenario, which factors in some kind of wider economic scare, leading to that deeper correction we mentioned, which would actually set a really strong foundation for the next cycle. So with this whole puzzle laid out, what's the real takeaway here? At the end of the day, this isn't about having a crystal ball to guess the exact price. Not at all. It's about understanding the forces at play so you can be ready for the ride, because it's probably going to be a bumpy one. And how do you keep tabs on that institutional wildcard? Well, here are a few signals to watch. Think of them as canaries in the coal mine. Futures financing rates. That's basically the market's panic meter. Big corporate moves, like what MicroStrategy does, tell you what the big dogs are thinking. And Bitcoin ETF flows, man, they're like a giant amplifier for whatever trend is taking over. So, if we put all the pieces together, one very plausible way this could all play out for late 2025 might look something like this. A temporary peak,
Then that classic sell the news correction that tests support at 70K or maybe even 50K. And finally, a period of consolidation that sets the stage for whatever 2026 has in store.
So here's the most important takeaway. Volatility is almost guaranteed, but understanding these core dynamics, the liquidity, the patterns, and the institutional money, is what can turn that volatility from something to be scared of into a strategic opportunity.
The storm is brewing, so the ultimate question isn't what is going to happen, but how are you going to prepare for it? Because the key isn't just watching the patterns, it's being ready to act with a clear strategy when they finally play out.